Hello, everyone, and happy Wednesday. My name is Rachel Deshelle. I'm a brand new coach here on Schwab Coaching, and you guys are here for my second class ever. So thank you for tuning in. Thank you for watching. Stay tuned today because we're going to dive into a few trades. We're going to calculate some favorable risk and reward setups, show you how to do that, and then stay around for a chart tip that we're also going to show you as well before you even start your technical analysis. So we have Barb in the chat today, so please chat in your questions, comments during the session. I'll try to pay attention to those as we're rolling today. But first, before we get started, I am going to cover some disclosures here. So just before we get started, options carry a high level of risk, are not suitable for all investors. Information that we're going to go through today is for informational, educational purposes only, should not be considered any bit of recommendation or advice. And this webcast is going to discuss technical analysis, but also other approaches like including fundamental analysis may assert some different views. And Schwab doesn't really recommend the use of technical analysis as a sole means of research. So let's get into what the agenda looks like today. So first, we're going to cover an announcement, look at some upcoming events that we have here for Schwab Coaching. We're going to dive into a market overview. We're going to place some example trades, look at different chart formations in the market, and then we're going to go through our trade management as well. And you'll be able to see, since this is my first time teaching this webcast, we'll be able to look in the coming weeks and manage those trades as we go from this webcast starting. So as far as our announcement goes, we have some upcoming workshops and market drive events. We would love to see you there. We actually have one this weekend in Orlando. I will be there. So if you are there, please give me a shout out. I am a lot shorter in person than I look at on YouTube. But we have a couple other events coming up in November and December. So we have the Anaheim Market Drive. We have our Houston Trading Workshop event, December 11th and 12th. I will also be at that one too. I'm excited to meet many of you. And then lastly, in Miami, we have our advanced options workshop there. So I am going to dive into the charts. We're going to start our market overview here. And before we even get started, let's start with that little chart tip. So one of the first things that I learned as a beginner technician is the difference between arithmetic charts and log scale charts. So the thing that I learned was anytime you have a chart that's longer, that's a year longer in time, because there's so much price variability within that time frame, the tip is to switch that to a log scale or logarithmic chart, which really the main difference is it's going to show price in percentages rather than just dollar values. So, and the reason why is because a $5 move in the stock price is a lot different when the stock price is going from 5 to 10 versus 100 to 105. So I'm going to show you how to switch that log scale here. I think by default, Thinkorswim uses arithmetic scale, but we're going to use log scale today when we're looking at these longer term price patterns, longer term trends, looking at a year or longer time frame. So there's your quick tip there. So let's start with the Dow. We're seeing a lot of the same things. We're seeing the markets kind of chugging higher. We're taking a little bit of a breather these last few days. And we're seeing that it's been riding this wave of its 20-period simple moving average. We've had quite a bit of bounces from there over the last few months. The thing that I'm kind of seeing as well as far as momentum is just looking down a little bit further at the RSI, which is giving still in a bullish regime. We're still above 50. But we're giving a little bit of a momentum divergence where price is moving higher, the indicators moving and making lower highs, which is why we call it a divergence. Now, that doesn't indicate a change of trend by any means. We'd have to see something actually happen with the price of the stock not making higher highs and higher lows. But this just gives us a little bit of a whisper in the market to what's going on with momentum or that speed in that price movement or that speed in that trend. So let's look at the NASDAQ composite. We had actually something different happened yesterday. We had a little bit of a bearish engulfing candle, and that's basically just when the body of the candle engulfs the prior day's body. So it doesn't have to engulf the entire candle itself. It's just looking at the bodies there. So I'm going to zoom in a little bit closer so you can look. Now, with any candlestick pattern, it's not a confirmed candlestick pattern until we see that next day of trading, until we see that follow through. So today we are actually seeing that follow through of that candlestick, and we're getting really close to invalidating that bearish engulfing candle, pressing in on those highs. So we'll kind of have to see where we close today. And if we make a higher high than that bearish engulfing candle, that tells us that that bearish engulfing was invalidated, and that trend is obviously continuing. So let's look at the same in the S&P 500. Same thing. We've had a bearish engulfing candle there. We actually invalidated that, so it's no longer a bearish engulfing candle there. Woohoo for the bulls. And then we're seeing the same thing with that. I mean, really the index just riding the wave of its 20-period simple moving average, really since that breakout in late April. And then let's take a look at the Russell 2000. We're still making new highs in that. We're still in a bullish regime here in the RSI. We've been pretty much consistently for the last 5 months, really above that 50 line in the RSI. We have a teeny tiny little divergence here, but obviously no change in trend, and let's see how far we are away from that 20-period simple moving average. We are less than 1% away. So if we were to, if this bullish engulfing, or I guess bearish engulfing candlestick were to still be validated today with no move higher from that, we may see a little bit of a pullback to its 20-day. That's where traders may be looking to find a little bit of support, which is also coming at those former highs as well that we recently broke out of a few weeks ago. So that's kind of coinciding with that level. So that's where traders would probably be watching there. Now, another fun chart, I brought this up yesterday in yesterday's webcast, but this is just taking a look at the Dow Jones Transportation Average. So I like to throw this up here because I know there's still some Dow theorists out there where we look to see if the industrials and the transports tend to confirm each other, because that old adage was, hey, you're going to have produce these materials, and we have to have a confirmation of the transports, which is like railroads and planes, things like that, bringing these products to market. And so that's something that is kind of sticking out to me, where we're seeing a little bit of a divergence in the market here. We've been in a downtrend, and we just can't seem to get above this resistance line, this descending resistance line here. We've touched it quite a bit of times. We had a push here, and then we've just been trading in this sideways pattern. Really, I mean, brushing up against that 20-day simple moving average for many weeks now. We're battling with that again today. So that's just kind of something to keep in mind. But that's kind of our first step in our overview of the market. So let's move to our first equity that we are going to look at on the chart. And when we're moving to these price charts, I'm going to actually take the indicators off. I can just right click and hide these studies, right click, hide the studies, to just give us a clearer picture of the price action. Because in this webcast today, I want to focus more on just the price action at hand. Getting better at just reading what's happening with the price of the stock, identifying those support and resistance levels, and then kind of projecting our price targets from there. So let's take a look at CNP. This is CenterPoint Energy. And I want you guys to tell me in the chat, what is the price pattern that you are seeing here? Because I could see it being a couple different price patterns. So I'm curious to hear from each of you on what is the price pattern that you are seeing. Because for me, if I zoom in and look at this pattern here, just forming over the last few months, I'm going to take my rectangular drawing tool, because a lot of the times support and resistance isn't just a cut and dry straight line. It's more of a kind of like a zone, so to speak here. This one's pretty tight, but we are seeing a valid resistance line that's been hit a few times here, right around 39.40 here. So if we look at this, we see actually 3 closes, well, I guess 2 closes above it. Today, we have to see where the market's going to close there. But this is looking like a little bit of a cup and handle pattern. So that everyone is responding in the chart as a cup and handle pattern. Another way that you could draw it is also an ascending triangle as well. We have 3 touches on the support line to make it a triangle. You really only need 2 touches of support, 2 touches of resistance. And we actually had 3 touches, or I guess 4 touches before the breakout here the other day. We had 3 touches on the sloping line here. So for today, we're just going to call it an ascending triangle. And in a triangle, we talked about how we look for those levels of support and resistance. We have to have 2 touches on either side. And then we also, as technicians, we don't want to anticipate a breakout because we don't know really which way the market's going to move. We don't have a crystal ball. So we're going to wait for confirmation of that breakout, which is actually something that we're seeing here today. I know some of you may look a certain percentage above or below a resistance or support breakout. You may look for 1, 2, maybe 3 closes above that line. And for me, it's given me 2 closes above that line. So I'm going to consider that as a valid confirmation for the basis of this trade today. So when we place a trade in a few minutes here, we're just gonna kind of place that trade at the current market price, seeing that we already have that confirmation. Now let's take a look at where we can craft the other elements of this trade just by looking at where we could put our stop price and maybe where we could put our profit target here. So we are going to look at the depth of this pattern. Now, whether you want to call it a cup and handle, whether you want to call it a ascending triangle, it's going to have the same depth on this one, actually. So I'm going to take a resistance or a trend line here and just take the start of the pattern down to where we're forming that next side of the triangle. So it's really, we're just taking the base of that. And so for those of you that are using this as a cup and handle, it's the same thing. It's really the depth of the pattern there. And if I hover over this is about a close to a $4 move. Now, it's nothing crazy. It's just a couple dollar move here. It's not too expensive of a stock either. So what we're going to do is we're going to take that depth of the pattern that we just drew there. We're going to right click and duplicate that drawing. And we are just going to project it upward over here. I'm going to zoom out, give us a little bit of a look here. We're going to have to pan down and see that our profit target is actually going to be probably right around, right around 43. Let's just say it's 43.25 there. So 43.25. We're going to keep that in mind as we craft this trade. And then as far as looking for our risk management, now traders will use risk management in all different types of ways. They may set an alert, they may keep an eye on the price of the stock, they may use stop orders, however you want to go about that. Now today we are just going to use a stop order on this example trade to give us an idea of just one way that we could exit this trade. So I'm actually going to start crafting this order as we talk through it. Now, when you're on Thinkorswim, you can place a trade from anywhere in the platform anytime you see the price. So I'm just going to click on the price up here. I'm going to go to buy custom with OCO bracket because we talked a little bit about our entry, which is going to be that first trigger in the order sequence. And then we talked a little bit about where our profit taking order would be. And then next we're going to kind of talk about our downside. So I'm going to click with OCO bracket here. Now we're going to keep things simple today. We could use options for this trade. We could look for a long call to the upside. We could do a bullish spread. So many different creative ways that we could build this order, but we're going to keep things easy and simple today just by using the common stock here. So we're going to already, first we talked about this, we're going to change this order to a market price. Now that's just going to fill us at that next available price. We don't have a guarantee on what execution price we're seeing. And then the next thing we're going to do is look at our profit target. So we already talked about our profit target being the upside of that triangle breakout right around 43.25. So that's our price there. Now, where should we look for our stop price? Well, there's a couple different things that traders may do when they're looking for their stop. Now, they may look for a certain percentage points underneath the neckline here or underneath that old resistance, now new support, or they may look at this breakout candle here, and I'm going to zoom in a little bit closer to that so you can see. They may look at this breakout candle here and actually look at the low of that candlestick as a stop order price. So that's what I'm going to use today in our example trade. And we're going to talk a little bit more about stop orders here. So I'm just going to look at this and look at my cursor and see where that low point occurs. And that is 38.77. So we're going to use that as our stop price. 38.77, and we're just going to use a stop market order. Now this is just an activation price for that market order. So that doesn't necessarily guarantee that we are going to have an execution at 38.77, but what that's working as is a little bit more of like a trade trigger to say when the price of this stock CNP is 38.77, that's when we're going to send our market order. So there's going to be no guaranteed execution. We would want to use that when we're just, we care more about the speed of the execution rather than the price of the execution. Now, you can really use many different types of stop orders. You can use a stop limit, a trailing stop market, and a trailing stop limit. So you can get real creative there. We have a lot of content and education around different types of stop orders, but this is kind of what we're working with today. So now that we got the price elements squared away, let's look at just our trade size in this account and see how many shares that we could buy. So we are working with an account that's about $128,000. Now, if I don't want to risk more than 5% of the account in a trade, that gives me a trade size of about $6,400. And I'm going to do just a quick little calculation here to see how many shares we could buy. So if I'm going to take 6,400, divide that by the price of the stock, we're just going to say 39.61. And that gives us 161.57 shares. So we're going to round that down. And we're just going to say 161. And we're going to lock that in. So that way it adjusts our sell orders as well. Now, another thing you also want to keep in mind of just how much we're going to risk on the trade as well. So we have our stop price at 38.77. So we can take the difference between our current market price, which is, let's say, 39.61 minus, whoops, I typed that wrong on my calculator, 39.61 minus 38.77, which is our exit. That gives us a difference of 84 cents. And if we take that times 161 shares, we're still within the parameters of our risk, not risking too much on any one trade, still staying well below our 1% risk parameters here. So the last thing I'm going to do is lock this in, and I'm going to click on the time and force chain link there and actually change this till canceled. Now the market order is going to execute immediately. Well, actually, I have to not lock this in because the market order is going to execute immediately, and that needs to be a day order. So I'm actually going to change that to day, or else it's not going to let us send the order. And these two are going to be good till canceled. So I'm going to hit confirm and send. And the last thing we're going to do is just double check our order to make sure everything looks okay. So we're buying 161 shares of CNP at market. We have our profit target up at 43.25 and our stop down at 38.77. So that all looks good to me. We are going to click send, and that order is sent there. Now, I saw a couple comments in the chat about the Fibonacci level matching the 43.30 target. Yep, that's pretty close there. Oh, I saw a comment about increasing my fonts. Yes, I will increase my font for each of you here. So if I look at the setup, application settings, and go to the look and feel, I will increase my font to large here. You guys let me know in the chat if that's a little bit better. I can increase it even more if I need to, but I'll be looking for your comments in the chat. And then Jerry, we bought the stock rather than the options just because we're keeping things simple today. We're running through a couple different trade examples. So that's kind of why we're just working with the common today. And then how would we assess time to target? That's another question that we had. So time to target. Now, when we're looking at the time that it could take to reach our target price, we're actually going to look at how long it took for that pattern to form. So in this case, the start of this pattern actually started forming on May 7th, and we didn't have a breakout until nearly 5 months later on October 6th. So in that case, if this took 5 months to form, that could tell us that it could take about 5 months for it to reach our target price. So that could be another reason why we may not be using the options, because we may not want to worry about time decay and things like that. We may just want to go the long stock approach in this case. But if you are using the options, you could look a little bit further out in time to not have too much time decay on the options. Maybe look at the leaps with those as well, just to give this formation a little bit more time to play out. And again, this is kind of like a small rectangle, or small triangle, got my wrong shapes there. And so we're working with a lower price stock. So in the coming examples, you'll see some larger price targets, more favorable risk to reward setups, because this one is basically a 2-to-1. So as traders, we want to look for those favorable risk to reward setups, because trading is obviously all about probabilities too. So the next example we're going to look at is ADM. So let's go through this one here. Now, what do we see as a chart pattern here on ADM? Put that in the chat if you'd like to. And what I see, I'm kind of seeing a deep flag forming. So I'm seeing from this really large candle, we have kind of a steep push and a climb here. And one tip I'm actually going to give you guys as well, to make it easier and more accurate for projecting your price targets, one easy thing that you could do is go to chart settings here and snap your drawings to the open, high, low, and close, because by default, it actually doesn't have a snapping mechanism. So you could be placing your start or end point anywhere on the chart or anywhere on that candle, but it makes it easier to just snap it to that open, high, low, close. That way you can get the low of the candle or the high of the candle in that case, or if you work with opens and closes, you can do that as well. Now I'm going to draw this flag pattern here. We had quite a few touches of resistance. We had a few touches of support there. And then we have had 2 closes above that line, similar to what we saw in the last price pattern. And then now almost a 3rd close. The day's not over yet, but that's what we're seeing there. And everyone in the chat is saying bull flag as well. I see someone said flag. You must have an accent there, Will. But looking at this price pattern here, something we're going to look at with a flag pattern and something to note is that steep ascent in price, which is something that we saw there. So that's going to be the first step to identifying this pattern. Now, the next thing we're going to see is a little bit of a consolidation or a little bit of a correction phase, pulling back, but not more than half the distance of that initial move. So if it pulls back more than that, it's probably not a flag, and we're seeing it's pulled back to about half that flag distance. And typically flags last a few weeks, maybe about a month, month and a half or so. So if it corrects for longer than that, it's also probably not a flag as well. But I know our eyes as technicians, we always want to look for patterns, but we kind of have to keep in mind some of these rules that actually exist with the context of some of these price patterns. So this is a bullish continuation price pattern, which means we're going to see a steep move up like we saw, a little bit of a pullback or consolidation phase, and then we typically see that breakout and that continued move up. And with flag patterns, it's kind of easy to calculate this move up in price because we can just take this flagpole, we can duplicate that drawing, and I'm actually going to, it's going to show way on the far side here. I'm just going to, going to duplicate this drawing here. Oh, we have two of them already. And I'm going to move it all the way over here to show where we could project our price. So I'm going to scroll over to the right, and we could project our price really around $71 or so. So right above $71. So that's kind of like the what we're seeing, that initial move and where we could project it from the breakout point. Now, if this was a bear flag, you would do the same thing, but the opposite. But this is going to be our bullish continuation pattern. So in this case, we're going to look for just another common stock example, and our price target's going to be right around, let me use the price tool, right around that 71 level there. So that's about a $10 move. That gives us a little bit of upside. And we saw this pattern forming over a period of 2 months or so. So that could tell us that it could take about 2 months to get there. So kind of using that time instance within the price as well. So let's just start crafting this trade here. So I'm going to go to buy custom with OCO bracket again. And I'm going to look to put my price, entry price, as a market order, because that will give me an immediate fill. Since we've already got our level of confirmation, again, you can use whatever confirmation you'd like within that process, within your trade process. Just make sure if you have a process and a plan, we make sure we stick to it. So in the last trade example, we went 2 closes above. We're sticking with that one for this one as well. So we're going to go with a market order, good for the day. And then we're going to place our profit target right around that $71. And then we're going to look for the next step as our stop price. So we could look for the low of this breakout candle like we did in the first place. That would give us a pretty tight stop. So if we look at the low of the candle there, we are looking at about, let's see, 60.61 as our stop order here. 60.61. And the same thing goes for when we covered stop orders last time. There's going to be no guarantee, but we're going to have our order sent as a market order when the price of the stock hits 60.61. So we want to wait till that happens. So GTC, we got this good till canceled. That's going to be good for 6 months for this order. But wait. We forgot a couple things. So we forgot about calculating our trade size and looking at our risk reward setup. So I'm going to do that next here. So let's take a look at our quantity of how many shares that we could buy. So our trade size is, again, that 6,400 because we don't want to risk more than 5% of our account on this trade. So let's just take 6,400, divide that by the current price of Archer Daniels, which is about 62.88. And we're going to get about 101.78 shares. So I'm just going to keep it a round lot of 100 shares here. So we're actually pretty safe in this regard. Now, one thing I'm going to actually take us through is just going through an example of how to calculate your risk to reward on a trade to make sure to ensure in your process that it's a favorable risk to reward setup. So in this case, I am going to look for my upside or reward to look at my entry price. And we're going to take our profit target minus our entry price, and that's going to give us our reward. So if our profit target is $71, we're going to take $71 minus what the current price is right now, which is $62.85. I'm just going to put this in here because we're going to use this for the next one, $62.85. That is going to give us $62.85. I'm doing that on my calculator here. That is going to give us a reward of $8.15. Now, if we want to calculate our downside risk, we can take our entry price, can't type today, minus our stop price. Now, again, this won't be a guaranteed price, but we're going to use our 60-61 as a guideline. So 60-61. So we're going to take 62.85, which is that entry price, minus our stop price, which is 60.61, and we get 2.24. Well, now the last step of calculating our risk to reward is easy. So we're just going to take 2.24 divided by 8.15. Or we could take vice versa as well. So 8.15 divided by 224. So that's more than a 3-to-1. That's more than a 3-to-1 risk to reward. So for a lot of traders, that would be a pretty favorable risk to reward amount. So that's kind of how you go through that process and just calculating it. Now, the other one was, I think I did that in my head on the other one. The other one was more of a 2-to-1. So if you're a trader that likes to look at probabilities, likes to look at more favorable setups, this one is looking like a little bit more of a favorable setup than the other one that we did. And that just by nature also comes with the price pattern itself as well, which we're seeing here in Archer Daniels. We saw that steep ascent into that flag. That's obviously going to give us a loftier price target. We talked about the time that it's going to take to get there. So we're giving ourselves a little bit of time for that price to get there. But hopefully that helps with just kind of calculating that as we go. So I'm going to hit confirm and send here. And I'm just going to confirm everything we already walked through, buying 100 shares at market, placing our profit target right at 71, placing our stop at the low of that breakout candle at 60-61. We always want to just slow down, maybe triple check our orders before we send it, because I know yesterday when I was walking through this, I actually caught myself making mistakes on each of the trades that I sent. And a great way to do that, to catch yourself right before you make a mistake, is to just double check and read back that order entry. So that's what I want to do. I love how I can do that with the chart in the background as well. So I am going to hit send here for this one. We got an immediate execution. We heard the bell. Now let's take a look at where our trades could be. Now, I'm going to create some different groups for some of these trades because, like I said, I put on a couple of these trades yesterday in my long options webcast, and we're going to be monitoring those trades as we go. Same with the trades that we placed today with ADM and CNP. We're going to monitor those next week. But let's look at some other chart patterns that I've been looking at in the market and what I've been seeing. And I kind of built that into a watch list here. So let's take a look at some other trade ideas that we may scour the market for, maybe look at even next week on next week's webcast. So AAE. AAE is one that I found that's actually forming a cup and handle pattern. We had that large cup, and then we had that handle forming, and we had that neckline or that resistance right around that 103. We had two closes above that resistance, and we're actually having a support retest on that one now. So with the cup and handle pattern, like I mentioned before, when we were looking at that other one that could have doubled as a cup and handle pattern, you just take the depth of the pattern. So you take the neckline or resistance all the way to the deepest part of the cup. You measure that, and then you could project that forward if you wanted to. So if you wanted to duplicate that drawing or just move it up here, you can do that as well to project that. Now let's move to AEP. We saw a little bit of a breakout here. We're just looking at this resistance zone that was tested multiple times. We actually had a gap up above that resistance. And this is kind of unique because it's not just a gap, it is a breakaway gap. And what is a breakaway gap? If anyone knows what a breakaway gap is, please throw it in the chat. But that is when price actually gaps above that prior resistance level. And that's kind of a unique type of gap that we're seeing there, and that just indicates the start of a new trend, actually. So like we saw, rounded basing pattern, we're having a couple closes above that, and maybe a trend continuation there. Let's look at Allstate. We are having a similar pattern to what we saw before, where just hitting its head on that resistance line, that real smooth line right around like 213, 214. And those lows in price, we've touched multiple times on that support trend line. That's forming an ascending triangle type pattern. So that's another one that we got there. And then here's another pattern that I found as well. So we had a little bit of a pennant. We can see it pulled back to about half the distance of that initial move. So we can still consider it a pennant. But if you want to be safer and consider it more of a triangle pattern, no worries, you can just take the base of the pattern, project it up. But if you see it as a pennant pattern, you could take that initial pull and project it upwards when looking at that bullish continuation or looking at those price targets there. Now, a couple more that I had on my list here. Another ascending triangle with two closes above, almost three closes above that resistance line that we're seeing there, right around 140, 141. And then Palo Alto actually is something that we're seeing here. I'm seeing almost like a inverse head and shoulders pattern that took place through time. We see the head all the way down here. We see the neckline that's pretty even throughout. We've seen that's been touched multiple times. And then those shoulders, this is one thing you want to look at. Those shoulders are actually kind of coming to the same type of levels, which is what you want to see in a head and shoulders pattern. And some folks may want to back that one out to look at that on a larger time frame to just see where that head and shoulders falls within the context of the broader trend. And it's kind of occurring near the high of a market. So I don't know how many folks would call this a true head and shoulders pattern or inverse head and shoulders pattern, because typically we see those as bullish reversals or occurring at the bottoms of markets. So that's kind of a dinger there on validating this pattern. A couple other things that you'd want to look at are increases in volume on the shoulders and on the head. But let's look at our last one here. This is kind of a crazy one that we've seen over the last few days. It's also forming a pennant pattern as well. So I mean, we went through a lot of different charts today. We talked in depth about a couple different trade ideas, calculating some favorable risk reward setups, and we even talked about how to switch your charts from log scale, from arithmetic scale, to just show, I mean, even earlier breakouts when you're drawing trend lines, things like that. So that little charting tip could help you in the future when you're looking at longer term price patterns. But I think the importance here is just to slow down, stick to your process, stick to your rules, make sure make sure we're kind of looking at those guidelines. If we are trading price patterns, knowing the rules that come with trading those price patterns as well. But I want to just thank you all for attending today. Thank you for your engagement in the chat. This was awesome. You guys really made this such a great experience, just being my second webcast ever. So definitely, if you liked this video, if you want to see more of this, help your own algorithm, like this video, give it a thumbs up. And you can also subscribe to our Trader Talks YouTube channel as well. So please do that. And I'm newly on X as well. So if you want to follow me on X, I pretty much post price patterns and charts all day, every day. I filter through the noise and I focus on the technicals. So my handle there is Rachel-CS. My last name was a little too long there. And we have a class coming up next called Getting Started with Thinkorswim. Cameron May is going to host that. Thanks again to Barb in the chat. Thank you all. Thank you for our production team just putting this together. And I'll see you next week.